Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, and a happy Friday to you all. It's January 14th, and here's the day we've been kind of waiting for. We got a lot of the economic news, so we'll start off with the retail sales. Came in not bad number, but disappointing in the sense of it came in under estimates and the prior month. So November was zero point 0.8, and it dropped down to 0.6%. So if you exclude the big ticket items like autos, will actually be at 0.5% versus 1.2% back in November. So a big drop there. And then if you look at the CPI, the Consumer Price Index, kind of a big number right there, the 0.5% when the prior month was 0.1, and that has to do with like food and energy that went up there. So, but with the Fed and what we kind of normally look at is the core. So we strip out the very volatile food and energy, and we look at the core, and it actually came in at a very modest 0.1%, and that's kind of where we need to be at. Industrial production also came in nice. It was a nice number there. I think came in a little bit of a surprise, came in at 0.8%. Consumer sentiment dropped kind of unexpectedly. Nobody anticipated a drop a bit on this. So these are kind of people are feeling kind of almost like recessionary numbers again. So maybe they got their credit card bills earlier for January. So after all the Christmas spending, who knows? But anyways, it was a little disappointing. 72.7 when the prior month was 75.2. And then you got the inventories. That are also low, 0.2% versus 0.8%. So also came in a little disappointing. So, but the stock markets are up. China also increased their bank reserve requirement. That's their way of them trying to fight inflation by making the outflow of money from the banks kind of stay stagnant by making them increase their reserve requirement. So so not lending money out as freely, I guess. It's a better word to say. And then also yesterday we didn't really have a great auction day. The bonds, that were on there wasn't great, but actually, it didn't really phase it. So let's take a look at what the bond market. We actually went up, so we had a nice price improvement even yesterday. We started off the same day, and we actually were up about 1925 basis points. So we actually had a pretty nice here, but now it's pulling out. Now this has been kind of eluding us for a while here. This around the high 99 mark to almost 100. It's been kind of eluding us. As we saw, we've tapped in this area and kind of pulled back down. This one had to do with obviously because of the bond rollover, but still it's been kind of eluding us, and we really kind of need to get upwards there very quickly. Otherwise, I kind of did the longer term chart from back in November. We were this high, so we were kind of nice here. These were kind of like all-time highs, but we want to at least get in this range, the 100 102 range, to at least bring some rates back. If we don't, we could easily drop down this range again, because as we can see, this has been pretty strong. And once we broke that floor, we stayed down here. Been down here since around end of November, on November 24th, I think is when the actual number came in. Right around the end of November, we just dropped underneath and kind of stayed there for a while. And we don't want to stay down there I'll say any longer. So, but rates are better today, or about the same as what we left off yesterday. Depends when the price sheets came out. As I said, it was up 25, 19 base points, but it's kind of pulled back. And so it depends where the lenders pulled the rate sheets, but it could be about the same or a little bit better today. All right, folks, you guys have a wonderful weekend, and be in touch with you probably on Tuesday, as Monday is Martin Luther King Day. Will be closed. So I will be back at you on Monday or Tuesday rather. Have a great day.